Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. Stock traders in the Asia Pacific treading with caution while Treasury yields in the U.S. dollar are under pressure. That's as the clock ticks down, of course, to a knife-edge U.S. election. Now, speaking of, Kamala Harris and Donald Trump are holding their final campaign events as they look to secure an advantage in the crucial swing states.
And I'm Stephen Engel at the China International Import Expo here in Shanghai, where Premier Li Qiang is set to address the event as officials seek to showcase an open economy to foreign leaders and companies.
Quick look at the market action, and yeah, it's a bit of caution here across the region as we count down to about 1 day before that U.S. election. So it's no surprise that people are kind of cutting their bets here right now. Those Trump trades that are fading, that continues for another day here this morning. So you're seeing that in particular when it comes to the dollar, when it comes to Treasury yields. We're flat right now, but basically the Bloomberg Dollar Index was down about 0.5% or so, nearly, which was the biggest sell-off that we've seen since September. Treasury yields also, you take a look at what we've been seeing, we're at just below that 430 level here after we saw these Treasury yields decline quite sharply, given that now bets that maybe people have been underpricing a potential Harris win are emerging now. The weekend polls, whether it's this Iowa one that just come out, does show perhaps Harris has a slight edge nationally and in some swing states as well. So that certainly is still the key volatility risk here this morning. You take a look at how the RBA is going to do later on today as well. They're set to hold, but given just how, deflation has been quite slow in Australia, we'll see how long. We basically have seen quite a bit of gains here when it comes to G10 FX. The key beneficiaries have been the yen and the Aussie dollar as well in some respects. We're at 152 levels for dollar yen, and you are seeing that helping the Nikkei 225 now. It's up about 0.9%. Still the outperformer here among equity markets. Taiwan just coming online, and we are seeing some downside this morning. Let's take a look at how those Trump trades are doing. Everything from the steepeners, which did flatten overnight, to the Mexican peso, which now has stabilized, but we're still talking about quite a bit of strength that's come back into that currency, and 7-11 levels for dollar China as well. But, we talk about the yuan volatility, the angst that we're seeing, the cost of hedging the offshore renminbi now did surge to that record high yesterday. So certainly it just goes to show the nerves that we're seeing in this market, and Bitcoin as well, which has actually declined recently. We're seeing a little bit of recovery here in the Asia session today. Futures looking like this in China. We're in the red this morning. Of course, it's the second day of the MPC, so we're halfway there into finding out any sort of news domestically within China. Yields are not doing too much on the curve, but the 30-year yield is down about 1 basis point, Dave.
Yeah, so I think what's interesting is, when you look at these Chinese markets, it's almost like we've really diverged into sort of big themes and big stories this week, right? So one is really on the elections coming through, where you have it showing up in the currency. So I think we were just, in fact, I was just typing right now. So the overnight vol, to your point, is up 21 points in the last few hours, which is at a record. Over 1 week vol is already at a record. We talked about this. But in the equity markets, to your point, we diverged overnight. The bond yield story seems to be related more to what might be announced out of Beijing today. So it's almost like we're treating these two stories as well. And separately, to Steve's point, right? We can't overemphasize how important potentially the speech is at the top of the next hour from the Chinese premier. He spoke there last year. The year before, it was the Chinese president. And might they even underscore and maybe even give us more clues what to expect as far as their efforts to turn around this economy, right? So we'll get you all these stories over the next couple of hours or so. Watch this very, very closely. All that said, to the point we were just making ahead of the U.S. elections, we're now at a record on expected volatility on the Chinese offshore currency. This is the 1 week gauge. You look at the overnight gauge as well. That's also at a record. So in other words, people are paying for protection at this point.
Yes, certainly. And let's take a look at what is the latest here when it comes to that U.S. presidential race. Donald Trump and Kamala Harris are sweeping across the swing state of Pennsylvania on the final day of campaigning for a presidential election that's on track to be one of the closest ever. For more, let's bring in our Bloomberg News senior editor, Michael Shepard. He joins us now live from Washington. Michael, it's good to have you on. Tell us more. What's in store in this last day of the campaign?
Well, they're not done yet. Both candidates have events planned and scheduled well into the night. The vice president, in fact, is on her way right now to Pittsburgh. Well, she will hold her penultimate event in Pennsylvania. She's dedicated the final day of her campaign to the Keystone State. In Pittsburgh, she'll be at a rally that'll be headlined by singer Katy Perry. And then from there, she'll go to Philadelphia, where she will be headlining, of course, a big rally there at the Philadelphia Art Museum, made famous in the movie Rocky, a signature event designed to really drum up enthusiasm in the base for that final push for Election Day tomorrow. The former president will continue his travels from Pennsylvania to an event tonight in Michigan, which is another one of those critical swing states. He'll be appearing in Grand Rapids, Michigan, which is where he has held his closing events the last two elections that he has competed in. So we'll be looking for him to issue his final words to his followers. We have heard him speaking in terms of his grievances and his misgivings about the election and his concern, in his view, that the outcome may not be fair, and that in his view, again, without offering evidence, that it may be rigged. The vice president, on the other hand, has been trying to present a more upbeat view, and she is not even mentioning her opponent in her final appearances.
Right. We've been talking about how this is almost, when you look at it on the surface, almost a coin toss, really. What are the latest polls showing at this point in time?
Well, the polls overall still show a very tight race. But in the intro, you did mention a couple of polls that seem to suggest that things are breaking a little bit toward Harris. It's tough to read. We have had so many surveys inundate us over the past weeks and months, including the Bloomberg News Morning Consult poll that last week showed a race that was basically deadlocked in the swing states. And yet in the last few days, we have seen signs that Harris may be breaking away with some of the late deciding voters, including women. The PBS Marist poll out today indicated that the vice president had a 4 percentage point lead outside the margin of error nationally. And also we see the New York Times poll with the vice president leading Donald Trump in the crucial state of North Carolina, a place he had won in 2016 and 2020.
Michael, thank you so much. Michael Shepard there, Bloomberg News senior editor. We'll also be talking U.S. elections later on this hour with Strategy Risks, Isaac Stone Fish. And in fact, their firm just put together this list of maybe which U.S. companies are most at risk given the geopolitical tailwinds and the like that we're seeing across the world. So stay tuned for this interview coming up. And certainly there is also a possibility that this time tomorrow, Yvonne, we will not know still who the winner is. Yeah, just given, as Michael mentioned, those concerns about Trump
calling this election early, calling this election win early as well. Certainly there are some concerns around that. But we're about an hour away from the Premier Li Qiang in China's keynote speech at the China International Expo, in Shanghai. Let's get to our chief North Asia correspondent, Steve Ingles. He's there on the ground for us. Steve, just tell us a little bit more about the importance of this event and really the importance of the speech we're about to hear from the Premier.
Yeah, I think it is pretty important because, of course, earlier part of this year, foreign investment kind of pulled out of China in large numbers in the first and second quarter. There seems to be obviously a resurgence of confidence led by that raft of stimulus that came in late September. But again, the investors and the world is kind of waiting for a big fiscal number. We can talk about that separately from the CIIE, and that is the Standing Committee of the National People's Congress, which is meeting right now over the next few days that will culminate Friday, perhaps in some sort of fiscal stimulus number that a lot of people are waiting for. But today, we are going to be hearing from Premier Li Qiang here at the China International Import Expo. It's an import-stressed expo. It used to be an import and export, but imports are increasingly important, obviously, if China wants to boost that main pillar of the economy, and that is domestic demand and consumption. At a time, of course, of continued stresses in the Chinese economy, whether it's the housing crisis, whether it's hidden debt at the local government level, and the geopolitical concerns. Obviously, at the backdrop of this is the U.S. election, which will be held tomorrow. People are all wondering, obviously, who will be in the White House come January. It won't necessarily be a part of Li Qiang's speech. I'll almost guarantee you he will not mention the U.S. election, but he will likely, as in past speeches from senior Chinese leaders, talk about the challenging external environment. But again, he is going to be here touting the Chinese economy recovery. He will be courting foreign business leaders and government heads who will be here over the next few days of the CIIE. So again, we'll be waiting to hear what Premier Li Qiang has to say at a time when, like the European Chamber talks about the mixed messages that they've seen. That was in their most recent position report, the mixed messages coming from the Chinese government on the open climate, given the national security versus economic growth challenges.
All right, Steve, thank you so much for setting the scene for us. Our Chief North Asia correspondent, Steve Ingles, joining us out of Shanghai. And later on in the program, Steve will be speaking to the Integrated Insights Chairman, Christopher Thomas. He's there also at the China International Import Expo. You want to stay tuned for that one.
Yeah, maybe they should think about changing the name. It's a bit of a tongue twister, that one.
Or it's just me.
Or us. Still ahead here on, let's try this, on the China Show. There we go. ANZ joins us to discuss their FX market outlook and really the potential roller coaster ride we might be in for in the FX markets ahead or going into the U.S. elections. Counting down to the open of trade and equity markets in Shanghai, in Shenzhen, and here in Hong Kong. 18 minutes away, a beautiful morning here in Hong Kong. This is the China Show.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7 live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Good Tuesday morning from the Asia Pacific. Currency markets very much in focus. A quick glance at some of the DM currencies out there. Of course, we've been seeing this unwind recently at the U.S. dollar, long dollar trades. All that being said, is also on deck today the RBA rate decision. We can get to that in a moment, but certainly the elections are front and center across this. And of course, when you talk about EMFX and who's most at risk here.
Yeah, I mean, given that the run-up in the dollar has kind of in some ways lost a bit of momentum just a day before this election, it just goes to show how much volatility there is around some of these so-called Trump trades, right? So EMFX, you look at the Mexican peso, that certainly is still the most vulnerable right now when it comes to the tariff risks and the like here. Also dollar China, right? So we're still holding on to that strength here right now in the currency. We're at 7-11 levels, but you look under the hood, whether it's the options market, volatility, the cost of hedging, everything seems to be showing plenty of nerves this morning in Asia. Let's bring in Mahjabeen Zaman, head of FX research at ANZ. Mahjabeen, it's great to have you just a day before this U.S. election and what could come in just about 24 hours. Just tell us about how you're mapping all these scenarios now, especially when it comes to the dollar.
Look, I think we have seen the Trump trade being priced in mostly. We've seen the dollar rally the last 3 to 4 weeks broadly. Look, that's ahead of, especially those corporate tax cuts that Trump has promised if he's elected, especially if it's a Republican sweep, that will come through pretty quickly. And, again, if that fiscal thrust comes, in line with any tariff announcement at the start of the year. I think, if you think, there might be some offsetting of the resilience and growth that we are seeing in the US so far, I think that those corporate taxes will somehow offset some of those, incremental inflation on cost of goods from tariffs, I think. On the other side of things, obviously, if Harris comes in with the divided Congress, I think that's probably pointing to that soft landing environment we've been positioning for the longest time and kind of status quo, and the Fed continues doing what they're doing. And again, one thing we must point out is that Fed easing cycles tend to have the most impact on dollar in the first or second rate cut, and thereafter other drivers tend to dominate. So again, if you think the Fed rate cuts are going to drive the dollar lower, we think much of that is already in the price.
Okay, well, Mahjabeen, you forced my hand here to talk about the Fed then. Do you think we will get that second rate cut this week?
Yes, we are expecting a rate cut coming up this week. However, I think beyond this, obviously, it all depends on the data. We have seen, a huge plethora of data come out, which to us still points to economic resilience, not just in the US alone, but versus rest of the world. And so we think that the Fed may not be in a rush to aggressively ease going forward.
Yeah, so how should I look at this, right? When I have a Fed meeting just days after this very, very tight race in this U.S. election, what currencies are you looking at that are most at risk to not just the U.S. election, but also from the Fed?
Yeah, we've done some work, and what we have found is probably dollar yen is likely more sensitive if we look at the G10 space, given that that's largely driven on the back of yield differentials. We have seen U.S. yields rally through the roof lately, and we think some of that might retrace back, and that should somewhat help dollar yen. On the other hand, though, again, there is two-way risk. If we see, let's say, a Republican sweep and we see there's more room for yields to go higher, then the question comes back, will BOJ need to step in and intervene? If we see a 160, probably we think the 160 might be a line in the sand, but we are quite a distance away from that. And a lot of that Trump trade, to some extent, is in the price, we still think.
Yeah, you bring up a very good point. Maybe that's the potential intersection where elections meet the Fed. And I'm wondering if we do get a sweep, and really agnostic of who wins, if we get a sweep from either party, Mahjabeen, do you think the Fed is forced then to maybe push back against a potential rise in yields in that scenario?
Look, this week, we think they'll go ahead regardless of the outcome. At the end of the day, you would argue they are independent and data dependent. But going forward, I think, again, just I think irrespective of who wins, the data just doesn't point to the fact that they need to ease aggressively. And then we talk about neutral rates being higher in the future, and inflation, that 2% could just be a floor going forward. All of that kind of points to a little bit of a higher rate environment broadly.
How should I look at EMFX, especially when it comes? It seems like the renminbi is also being expressed the most when it comes to this U.S. election risk. Should I expect dollar China to go higher if we do see a Trump victory, or do you think that tariff risk has been priced in already?
I think some of the tariff risk has been priced in. So if we don't get that Republican sweep, or actually we don't see a Republican win, we might get a retracement. However, if we do get Trump winning, whichever the combination is, I think what we saw in the previous term for Trump, dollar CNY really performs, or you see outside moves, not on the speculation, but on the actual announcement, which, depending on if President Trump comes in, January onwards, and depending on the size of the tariffs, all of that, will depend on how much the dollar CNY will move. But at the end of the day, we also know PBOC has plenty of tools to come in to defend, depending on how much they allow it to weaken. We remember last year, 730, 735 was the line in the sand.
Right. Let's maybe talk about the RBA, then we can talk about your Aussie dollar call in a moment here. So we have a meeting today. Inflation seems to be quite stubborn. And while today might likely be a hold, do you think we'll get a rate cut before the end of the year, Mahjabeen, or is that simply a next year story?
It's very much a next year story. We currently have February penciled in for the first easing from the RBA. We just had Q3 CPI that came out, and it came out in line with RBA's forecast more or less on the three mean side. Today, we expect the RBA to shift towards a more neutral stance. So they are shifting, but at the same time, we don't think, at the end of the day, when we read the minutes, we see whether a hike was discussed or not, whether a cut was discussed or not. We definitely don't expect a hike to be discussed at this meeting, just given the data has been in line with the RBA forecast to quite a large extent.
Yeah, you have a forecast for the year end for the Aussie dollar at 69 cents. I mean, that's what, about a 6% gain from where we are at these levels. How do we get there?
Look, there are a couple of drivers around that. First thing is, the RBA higher for longer, probably the only major central bank that has really not thought about easing. There are risks that, this easing cycle might be pushed out further, depending on how long and how sticky inflation is. That's one thing which makes us more optimistic on the Aussie. And the second point, Aussie is cyclical currency, does well in risk-on environments. Generally, we have risk-on environment towards the end of the year. In equities, we have a center rally that takes place. Of course, all that dependent on elections, but generally that tends to drive up cyclical currencies like the Aussie, Kiwi, and the rest, and we're using that to factor into our forecast as well.
Mahjabeen, we started with the elections. Let's end with the elections. How do you think we're positioned right now going into tomorrow?
Look, I think on the dollar side of things, positioning does look a little bit extended, but then again, not at previous levels, previous highs. When we look at euro, it's quite interesting. The futures, CFTC futures do show that euro shorts are pretty extended to 2022 levels, close to the Ukraine-Russia war at the onset of that. So you could argue scope for that to shift significantly further may be limited from there. But then again, going into the European story, obviously that's a both issue there as well that we could discuss if you like.
Oh, yeah. No, you opened up a can of worms.
Ran out of time.
We can do that next time. Mahjabeen, thank you so much. Mahjabeen Zaman, their head of FX research at ANZ. Going into the open today, 7 minutes away to cash markets. We did get a rally, of course, overnight in a lot of the China proxies listed in the U.S. Hang Seng Index futures. Your 10-year yield is down a fifth day. Do we get number 6? And dollar China, as you can see, bottom of your screens. Plenty more ahead. This is Bloomberg. Good Tuesday morning. We are we're not pointing lower across these markets. Just keep in mind, we're coming off quite a rally, of course, against the grain move in prices yesterday. HSTech down about 1% in the early goings. We're just about wrapping up earnings season. More on that in a moment because we have some numbers here coming through out of Yum China yesterday and some market reaction there. One thing to watch is turnover as we await the details on this fiscal stimulus plan. And I think we're now up to 24 straight sessions that turnover in mainland China has been north of 1 trillion. We could get day 25 or session 25 today.
Yeah, it's turnover. That's certainly one gauge to watch. Margin financing. I think those are the two indicators that, there's still a lot of interest in this market here right now. There's also a lot of these outflows from India people are talking about, where that kind of rotation from India to China is becoming a little bit more consensus, I guess you could say, as well. Some stocks to watch. We're watching Yum China shares very closely here. So the ADRs jumped. We're seeing that in the pre-market here right now. So they talked about the EPS beat, also announcing plans to step up its capital returns to shareholders. We got Morgan Stanley's and Jefferies raising their price targets this morning. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets, and with just 1 day to go before this U.S. election, you're not seeing a whole lot of risk on the table as expected here. And the Hang Seng is now seeing a bit of a retreat in the pre-market. Dollar in China, though, we're still seeing that strength being held, just given the dollar decline that we've seen, Treasury yields that decline overnight as well, and those yield curve steepeners, or these so-called Trump trades, also fading a bit as we start to see a little bit of those doubts coming through whether Trump is going to win or not across the overseas markets.
Yeah, I guess the positioning was, I guess, just judging by what we've seen the last few days or so, maybe a bit too extreme on the dollar side. I think we spoke with, well, we did speak with Mahjabeen Zaman out of ANZ a couple of minutes ago, and she did say it did seem overextended, the positioning around the U.S. dollar. I guess that's one thing. The other thing that we're waiting for today, at least this week, of course, is the NPC and the details out of that. We'll talk about Hong Kong in a moment, because I forgot to mention we also did get details on Hong Kong PMI, which came out earlier on. Okay, a couple of things. We talked about turnover in China. We're down 0.3%. So turnover, margin debt have been picking up. So interest has remained in this market. We had a very big drop, relatively speaking, in dollar China yesterday. In fact, on dollar offshore, intraday we did dip below one of the support levels. On dollar onshore, we touched a 50-day moving average. So that opens up right now. We'll see how we trade on the back of the sort of retracement or reversal in dollar strength. As far as bond yields go, do we have that? Yep, 10-year yield on your screens. Down a fifth yesterday. We could be down number 6 today, also on the 30-year yield. Now, over in Hong Kong, interesting one here, 52.2 is the PMI number which came through out of Hong Kong, which actually now takes that specific level to the highest going back, wow, okay, to about March of last year. So it's been picking up for several straight months now, from June to July to where we are right now. Separately, when you look at Hong Kong as well, some of the big tech stocks, of course, there's this sort of strange gap in the earnings conversation in Hong Kong, where we're almost done. Well, we are done in onshore. Next week and the week after that is when you get the likes of Tencent, Alibaba, Meituan, JD.com start reporting earnings. Keep an eye on that. Speaking of earnings, Yum China was the one that reported yesterday. Big move up overnight. Big move, I would imagine, as you can see on your screens. There we go, 5%. It was a beat on EPS and also encouraging as far as the CapEx plans are concerned. So at least as far as that part of the consumption outlook is concerned, continuing to give us, I guess, give the bulls more to latch on to. Now, speaking of economic data, so we talked about PMI to Hong Kong. Caixin services, I believe, is coming out in about 15 minutes or so. And, you know, the texture of economic data has been decent of late, to say the least.
Yeah, if you take a look at that Citi Economic Surprise Index for China, and it's actually turned positive, right? Where we've actually have seen some upside surprises in the data of late. We thought, you know, in October it was going to be seasonal, it's going to be during the National Day holiday, but we've still been able to churn out some pretty decent numbers, whether it's the PMI, home sales data that we talked about.
The top 100 developers.
Yes. And then you have, even just overnight, we heard about Country Garden, and the sales slump there seems to be abating here. You know, the on-year sales did still fall, but it seems like it's narrowing at least the declines to 31% in October. And this is after we heard from the stimulus, too.
Yeah, we probably might get more details, or perhaps even more. I'm speculating, but of course at the top of the next hour will be a speech you will not want to miss. The Chinese Premier is speaking, of course, at this conference. We'll get to that, of course, later on. Yep,
so we've been kind of sandwiched between these two big events that are going on, the U.S. election, you have the Fed decision, and also the third, which is the MPC Standing Committee that is meeting this week in Beijing. Let's get the take from Bloomberg Economics, and they think that we could get some top-line figures for issues, in particular like local government debt, out of that gathering as well. Let's bring in our economist, Eric Ju. He's here with us. What could be announced this week?
I think probably finally we're going to get some top figures, you know, what the package would like. At least, you know, that's the answer many investors have been looking for since last month, right? So I think, but we don't think it's going to be a wow, you know, number like 10 trillion or 20 trillion. So we don't think that will be that strong number. And I'm starting to thinking probably that they strategically hold this meeting during the U.S. election week. It's not because they want to wait for the Trump or Harris win. I think it's they probably more or less they want to take some focus off this meeting. You know, when all the markets are, you know, eyeing watching the U.S. election. So whatever number they're giving, you know, it's probably, you know, will give less impact on the market. So that's my view.
Interesting theory.
Yeah.
Well, let's do that. Let's talk about Harris versus Trump then. What that means for China.
Yeah. Maybe I finish the fiscal package first.
Yeah, go ahead.
I think like you mentioned, we heard the news about yesterday. They discussed the local government debt swap. Yep. So I think that's package probably around 6 to 10 trillion over 2 or 3 years. So it's roughly 2 or 3 trillion a year. And the second package, the second measure, we think is on housing market. So it's more like they will issue special government bonds to let local governments buy the unsold homes. So we think it can be up to like 1 trillion per year. Right, so at least for next year. Then the third part is the bank capital injection. It's another 1 trillion. And the final part, we think the government might start to, spend some money trying to living, supporting those consumption. Right, some measures trying to give subsidy to childbirth, increase support to those low-income groups. That might give you another 1 trillion, for next year. So altogether, we guess the package probably it's around 5 or 6 trillion for next year, right? So I think it's a reasonable number. Of course, it's probably not as much as some investors expected, but I think what we should look for, it's not really the headline number. We think what matters more is how they're going to spend the money. And from the areas we're expecting, we think they're trying to fix the economic problem in the housing market, in local government debt swap. So it's not really matter how much money you spend that. What matters really is how you spend money and the implementation at the local government levels.
Yeah, we were just talking about the U.S. election risk as well, whether it's Trump, whether it's Harris that wins. How are you calculating some of these tariff scenarios now?
Yeah, I think basically it's not a big deal who wins because on China's stance, like I said last week, it's more or less the same, right? But a key difference between Harris and Trump is Harris probably it's a continuation of Biden administration, so we don't expect too much surprises. It's more or less they keep doing those small yard hand fencing, right? It's more on export controls. But for tariff, so Trump is a tariff man. So definitely we think China is going to get more tariff under Trump, right? But how much they are going to get, we don't know. Trump threatened 6%. Probably we can take that as the upper bound. But if in that extreme case, we calculate the model that at a 6% tariff, then the worst result is the U.S.-China trade, goods trade, can basically shrink to zero. Right.
Eric, thank you. Eric Zhu there on the two major stories, of course, affecting China. For our clients, you can find that on your Bloomberg terminal. Now, really on this last point that Eric just mentioned here, now we spoke with Scott Kennedy from the Center for Strategic and International Studies at this time yesterday, and really who explained to us how Beijing might actually react this time if it is faced with high U.S. tariffs.
They're also ready, if needed, to push back much harder on the U.S. this time with disproportionate penalties, attacking a variety of American companies that have big business in China if there are significant Chinese or non-American alternatives, selling U.S. treasuries, perhaps devaluing the renminbi to put pressure on the U.S. and others.
Let's bring in Isaac Stonefish, founder and CEO of Strategy Risks. Their firm just came up, of course, with this ranking of America's largest publicly traded companies by their China exposure. Isaac, good morning from the Asia Pacific. I guess before we get into the stuff itself, take us through the recipe. How did you guys come up with this list, and how did you measure the criteria?
We broke it down into 5 categories. Partnerships and politics, which is the links between companies and the Communist Party, which for China is incredibly important. Business fundamentals, the metrics usually measured in studies like this, revenue, presence in China. Supply chain, very opaque but very important. Regional issues like companies' exposure to Tibet and the region of Xinjiang. And then opacity, because this is an area where there's not very rich data, and we don't want to unfairly penalize companies for trying to share information.
Okay, and what it came out with was the top 10 U.S. companies with the greatest degree of China exposure. You talk about Ford, Carrier, Apple, Tesla, Coca-Cola, Walt Disney, for example. I mean, just run us through what those risks are now, and what are the scenarios that you're looking at, whether Harris wins or Trump wins?
So the risks for companies with very high China exposure are both from the United States and from Beijing. People often mistakenly think that companies that have spent the time, the money, the relationship building with the Communist Party are going to do better in China, but that's often not the case. And many of these companies have faced pretty major public scandals or public issues in China that has really blunted their growth. In terms of the issues for companies, whether Trump or Harris wins, it's fascinating because there's what the market thinks is going to face these companies and what actually is likely with Trump and Harris policies. So we have a study coming out later this week, which will show for companies with low China exposure and high China exposure, how they do with whoever Trump or with Trump or Harris victory. My guess is that the market's going to expect that Harris will be softer on companies and their China exposure, but we'll know in a day or two.
Yeah, just to pick up on one of the components you guys brought up here. So supply chain risks, which of your of the U.S. companies that you think actually have systemic supply chain exposure to China?
One that was very surprising to me is RTX, Raytheon. It's a major U.S. defense contractor, one of the pillars of the U.S. defense establishment, and it has relatively high supply chain exposure to China. And so investors need to understand that for companies like RTX or companies like Boeing, if there is more decoupling, then those companies' production lines are going to be at risk. And it's a material factor that investors should be aware of.
Do you think that China's done enough to, at least for multinationals that are operating in the mainland right now, do you think that they're doing enough assurance at a time of a slowing economy to at least keep business going for not just private enterprises in China, but also multinationals?
No, I think absolutely not. I think publicly these companies will say, yes, we feel pretty assured. We feel like there's a path forward. Privately, there's a lot of worries. And I think companies are starting to understand the need to both have a measure for their China exposure, but also to start managing it and reducing it. We are on the precipice of what could be a contested election, could be heavy tumult with geopolitics, and companies and their investors understand that this is a time when you really need to think about risk.
Yeah, well, the notion, Isaac, just to maybe pick up on that, the notion that U.S. companies in particular have been even silently de-risking or reducing their exposure to China, well, to your other point, it is really a market they cannot ignore.
Yeah.
What is the advice to those types of companies?
Well, you all talked about Yum Brands earlier. That was a very early company that split up into several different companies. And that way it was able to still capture some of the China value while having the Yum US and global arm far less exposed to China. We hear talk about that with HSBC. We could certainly expect other companies to do the same thing. For the companies that we work with, we encourage them to have a really good sense of what their exposure is. It's not just revenue, it's not just supply chain, but understand the way that they're linked to the party, and then what concrete steps do they need to take both to better manage that risk, but also to protect their people in China from reprisal.
Yeah, well, Isaac, maybe I don't know if this is probably a good company as an example of that, but we noticed that you posted this on LinkedIn yesterday. Why are we not talking about Tesla and Elon Musk enough? Just take us through your thinking here. In what way should we look at a company like Tesla, who obviously has massive exposure to China as a final market, but also supply chains and the relationship? And who knows, if Donald Trump wins, Elon Musk might actually get a position in the administration.
So Elon Musk is a brilliant entrepreneur, world's richest man, but also someone who refuses to say anything critical about China. And so you wonder what is missing there. And then you dig into Musk's exposure via Tesla, and you find it to be absolutely massive. It's in our top 5, and it's something that we feel like people really need to understand: the supply chain exposure, the joint ventures they have with the party, the ability of the Communist Party to not provide certain licenses or supplies that Tesla needs. The other issue, and it's true for most of these major companies that have large China exposure, is that Beijing views them as a threat. And Beijing is very worried about Tesla's driving around military compounds and spying on Chinese officials. It's worried about all the data that Tesla can collect in China. And so as a result, it tries to limit the ability of Tesla to do that. It requires it to store a lot of data in China. And as we all know, storing data in China can cause real problems for the safety and the sanctity of that data globally. So that's another major risk. We are starting to see cars as smartphones, and when you allow for a company with very heavy China exposure to gather global data, it's something that regulators, investors also need to be aware of.
Yeah, and I think Apple's kind of dealing with the same thing as they try to bring in Apple Intelligence to China, Isaac. But the fact that Elon Musk has shifted to the right and as Dave mentioned, potentially could be in a potential Trump administration, do you think that bodes well for at least China, that that there is someone of influence in this Trump administration potentially that could help maybe weather these relations between U.S. and China?
There's talk about who the next Kissinger would be, and permit the impolite way of describing it, but Beijing is looking for the next useful idiot who can advance Beijing's policies in Washington while giving very little in return. Musk would be a very different mold for this than Kissinger himself. I think what we've also learned from Trump is that Trump is very mercurial, and Musk could advocate very strongly for one position, and Trump could very much go in a different direction. That said, in the near term, providing that Musk doesn't get caught up in some sort of conflict of interest provision that doesn't let him do what he wants to do from an investment perspective, Musk's relationship with Trump probably does bode well, at least in the short term, for the value of Tesla stock.
Isaac, fantastic to talk to you as always. Let's do this again, sir. Isaac Stonefish, founder and CEO of Strategic Risks. Right. Very quickly, as we were just having a conversation there, the PMI numbers are out. Caixin, this is services, and also composite, both coming in above expectations. In fact, the services number, which is consistent with the trend we've seen from the last two data points, the official PMI and the Caixin manufacturing PMI, have blown through economists' forecast. This one coming in at in fact, above the very top end of forecast, consistent with what we were speaking about earlier on, this economic surprise index that has now turned positive. That's a city gauge I'm talking about, turned positive of late.
Yeah, I was just looking at that print of 52. That brings us back to the highest levels we've seen since July, so maybe about 4 or 5 months or so. So certainly that is a positive signal here. We'll see if that actually matters for these markets here as well. But maybe, yes, it's early signs of stimulus working through the data once again. We got plenty more ahead. This is Bloomberg. Welcome back. Morgan Stanley's chief U.S. equity strategist says the U.S. election could present a market clearing opportunity. Mike Wilson told us what he sees as the top concerns for traders ahead of the vote.
The general trend in labor is down. We're in a late cycle economy. So the equity market is worried about growth slowing, and that's why the Fed's cutting interest rates. Okay. So the bond market can't, the market goes up because growth is better, and people believe that, then it could be okay for equities. If bond market yields go up because term premium is widening, because of fiscal sustainability issues, then it's a problem.
Well, I guess the reason why I ask this is because the Trump trade is, the knee-jerk reaction supposedly is bond yields go up and equities rip, particularly in the more cyclical sectors. I'm thinking of financials. Based on the idea that you're not necessarily getting some sort of economic impulse that's immediately overlaid onto this scenario, why should risk assets continue to rally if yields continue to surge simply on this idea that the deficit's increasing and that bond vigilantes suddenly could be back?
Well, first of all, the financials is a little bit different because that's a dereg sort of call, and I do think that one's fairly visible. I think if you have a Trump presidency and maybe even a red sweep, you could get more lenient regulatory environment, maybe M&A picks up. That's kind of the financials trade, but that's unique. And we don't think the financials have really rallied that much on that trade yet. It's been more about the third quarter earnings season and the fact that we went into that earnings season with not a lot of high expectations. So I think there's scope for further follow through in certain quote unquote Trump trades. At the same time, there's probably, the other side, which is I think a lot of the negative trades have played out for the Trump trades. I mean, bonds have sold off probably too much. And the renewables and things like consumer goods companies that will be hurt by tariffs have really been hammered. So if Harris wins, you could see a pretty big rebound in some markets. So there's a lot of permutations here. It's not as clear cut. I think you said it exactly right. It's all about the setup. Okay, stocks and asset prices move based on positioning as much as they do about the actual news. I'm looking for a clearing event. Okay, I'm hoping this is a clearing event, and then we can kind of get back to doing what we get paid to do, which is analyze interest rates, earnings growth, and kind of multiples, trying to figure out, okay, what's the fundamental case here? And my guess is that could take maybe a month to kind of clear.
And that was Mike Wilson, Morgan Stanley's chief U.S. equity strategist, speaking, of course, with our colleagues at Bloomberg Surveillance. Now, if you're a Bloomberg subscriber, you can catch up on all the interviews you might have missed, including that one on our interactive TV function, TV Go. You can join the conversation and send us instant messages during our shows. Any questions you might have, of course, for a guest coming up, do feel free to drop them into that facility, as they say. Check it out, TV Go. This is Bloomberg.
All right, another check of the markets here right now. We're watching the property sector very closely here. So there is this meeting of onshore bondholders to discuss that restructuring for Sunak. So the stock is up some 7% leading up to that. I think you would look at Country Garden sales where, that sales decline has seemed to be at least narrowing a little bit. That could be a bit encouraging that the numbers are at least looking a little bit better. Tier 1, certainly you're seeing that little bit of a turn more positive in the property sector. I think a lot of economists can tell you, though, Tier 2, we haven't quite seen this sort of recovery spread too much just yet. No, not just the big cities still. And I think in particular, the Tier 1 cities very near Hong Kong, of course. I think Guangzhou is seeing substantial amounts of activity taking place in the property market. Not so much in price, though, but at least people are interested. I mean, you can even say the same thing about cars, for example. We talk about BYD. And Tesla, I think we have another story on that as well. The Tesla shipments in China coming under pressure because things have been picking up from the local car makers. Record, I think, shipments from XPeng. And this subsidy, this 20,000 RMB subsidy to replace your gas-guzzling car for an EV is really starting to gain traction there as well. Speaking of, well, there's no pivot here. Yum China out with earnings, doing very well on EPS, good capex as well. Plenty more ahead. This is Bloomberg. Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. And we are seeing basically things doing quite well. Markets turning a lot more positive here on the back of those Caixin PMI services numbers, which did actually surprise the upside with a print of 52 in October. So the data seems to be looking a little bit more positive. And then again, of course, it seems like this market has been quite detached to a lot of the U.S. election risk. We're focusing on MPC. And we got this speech from the premier coming up any moment now. Yeah, he could give us more on top of the data that we're seeing. So in fact, to Yvonne's point, right, equity markets are now on a two-day run. CSI 300 up 0.5%. The Chinex index and really small caps in general are up. I think in this specific index, we're up, I think, 4% over 2 days or so. So this one has really decoupled from just a global range-bound trade, if not to the downside on equity markets. The dollar has been rolling over a little bit of late. But separately, though, speaking of the dollar, the only one perhaps that is standing out on the China story that is election-related has really been in the Chinese currency, right? When things like hedging and insurance and implied volatility have really been picking up. In fact, that one has just simply exploded to the upside. Some of the election trades on your screens, dollar China. Bitcoin has been pulling back. It's now up a little bit, up about $1,000, give or take, in a 10-year yield, which did see substantial downside
going into this morning is now at 4.3%.
Yeah, Grace Chan from BNP Paribas, she's going to join us there. They had an out of consensus call that U.S. 10-year yields are going to hit 4%. Seems like we're heading that direction in some cases as well. But yeah, that certainly is to be dependent on what this U.S. election result is going to be. But you take a look at how the rest of Asia is faring here. We're trading quite cautiously leading up to this U.S. election. Futures are pretty flat in the U.S. as well. That Bloomberg dollar index did have one of the biggest sell-offs we've seen since September. So as Dave mentioned, some of those Trump trades, which really led to the dollar to have a big run-up in most of October, that seems to be retreating right now. So one of the key beneficiaries, ANZ's, just mentioned that the yen seems to be the most sensitive to a lot of this U.S. election risk. But it's, in the G10 space in particular, we did see quite a bit of movement in the Swiss franc. Euro dollar is all around that 108 level as well this morning. And yields, as Dave mentioned, yeah, we did see that sharp decline lower. We're slightly higher when it comes to the U.S. 10-year yield at 4.3% right now. Let's get to where we are in Shanghai and our chief North Asia correspondent, Stephen Ingles, who is at the CIIE there in the city. And we're about to hear from Li Qiang. What's he likely to say, Steve?
Yes, it's what he's likely to say. What he's likely not to say is what investors and all of us are obviously here waiting for, because you mentioned the election in the United States. I do not expect him to mention anything about the U.S. election other than maybe talking about some of the global uncertainties, the external challenges that persist, that obviously the Chinese government and the Chinese economy needs to overcome. On top of that, he's likely to strike a very conciliatory tone towards guests from around the world, saying China is open for business. They're breaking down the barriers to investment here. They want to obviously boost domestic consumption, and imports play a very key role in that. Now, behind me are all these screens that say CIIE, which is the China International Import Expo. That's where Li Qiang will appear on the screen and give his speech. I couldn't get a hard time for the exact start time for his speech, but we're expecting it any minute now, within the first few minutes of the 10 o'clock hour here. And that's, again, we're waiting for any potential clues as well, like other Chinese leaders have given us over the last few weeks about stimulus potentially coming from the National People's Congress Standing Committee meeting, which is ongoing in Beijing right now. Liao Min, the Vice Finance Minister of China, telling Bloomberg on the sidelines of the IMF World Bank meetings last week that the stimulus proposals that potentially could be coming at the end of this meeting are quite large in scale. So that's something as well that we are looking forward to, potentially any hints from Li Qiang in his speech.
Yeah, Steve, the Xinhua news agency reporting, well, late last night, that Premier Li did meet with both foreign and domestic executives there. Yep. I guess to your point on the message that he would be giving out, underscoring this message that China is open for business. I was wondering if you could talk a little bit more about that, because while we focus on the macro and these big numbers, it's really in the micro where the rubber meets the road for many of these companies, Steve.
Absolutely. He did meet with some foreign leaders as well as foreign CEOs here in Shanghai yesterday. He talked about optimizing the business environment and the investment climate here in China, and also addressing in a timely manner some of the concerns that the foreigners have in China. Obviously, there's been some pullout of foreign direct investment into China in the early part of this year. There's encouragement, of course, with the raft of stimulus policies that came out in late September. That might have petered out a little bit. That's why we're waiting so much about the potential big number on the fiscal side. But again, you know, the European Chamber of Commerce has come out with its position paper for 24-25, as well as a business confidence survey. There is obviously hope for the European companies that are doing business here, but there's also outlining some of the challenges. The weaker economy, obviously, with a hidden debt at the local government financing vehicles, the property mess that is ongoing, the low consumption, and I'm seeing Li Qiang is about to speak right now. But at the same time, they did complain about mixed messages coming from the Chinese government, and that's something that they'd like to address. That's something Li Qiang did address to those foreign CEOs yesterday here in Shanghai.
And Steve, just talk a little bit more about what we're hearing that's also happening in Beijing at the same time as the MPC. A little bit more details on this debt swap program for these local governments. What do we hear?
Yeah, that's right. Well, Xinhua did confirm that they met yesterday, did talk about this potential debt swap for the local governments. Obviously, these local government financing vehicles have taken on a huge amount of debt burden. A lot of it is off balance sheet, hidden. IMF says it's to the tune of 60 trillion yuan. That is a huge number, $8 trillion US, and that this debt swap could obviously free up these provinces to use cash in other ways, whether it's provincial employees, whether it's construction projects. But again, it's addressing that hidden debt issue at the local government level because, again, through the pandemic and through COVID-0, their fiscal coffers were extremely strapped and they need some relief. So that is a big part of this MPC Standing Committee meeting. But on top of that, are we going to get any kind of housing measures from fiscal stimulus? Are we going to get any measures to boost consumption? And what would that entail? And what would be that headline number? I've seen a number of different numbers, upwards of 6 to 8 trillion yuan. But again, we'll have to wait perhaps till the end. According to Liao Min, the Vice Finance Minister of China, he says at the end of the Standing Committee meeting on Friday is when we'll get details.
Steve, thank you so much. Stephen Engel there in Shanghai, our chief North Asia correspondent. Behind him, of course, is the Chinese premier who is just about beginning his speech right now. Our top stories are jostling for airtime position right now. We'll take you straight back from Shanghai to Pittsburgh. And you're looking at live pictures now of Kamala Harris at a rally taking place as we speak. Now, of course, our big picture story today, of course, is on the U.S. election, what this means for the world. And certainly as Kamala Harris and her rival Donald Trump are making their final campaign push in Pennsylvania. Certainly when you look at the polls, it's almost a coin toss, really, at this point in time. For the latest here, let's bring in Jill Deeses, our news desk editor, to just get, do we know any better right now of who is slightly in front of the other, if at all, at this point in time?
At this point, honestly, David, it's so difficult to tell. There were some polls that came out over the weekend that broke favorably for Harris. Nationally, it seems like she's up a bit in some of the latest polls, although, as we know, this isn't really about the popular vote. We've seen, Democratic candidates before, most notably Hillary Clinton, win the popular vote, but then lose the Electoral College vote. That's really what matters here. So it's about whether she can prevail in some of these swing states, including, as you're seeing here in Pennsylvania. That remains entirely unclear. The poll that everybody's focusing on, though, is this one out of a really respected pollster in Iowa that actually had Kamala Harris up by 3 percentage points. Of course, all of this is still within the margin of error. That poll particularly interesting because Donald Trump carried that state very decisively in the last two elections. Whether that actually bears out, that's kind of running a bit contrary to a lot of the other polls that we're seeing. Maybe it shows that she's got a little bit more support among, white Midwestern voters than we might otherwise see. But really, I think when you take everything in aggregate, it really does come down to the fact that there's a whole lot of uncertainty about who's actually going to prevail here.
Yeah, and the big take today is right on that topic here, the election's impact on the rest of the world. What is this outcome of this U.S. election going to mean for the world, Ukraine, the Middle East alike?
Sure. That's, obviously a ton of different, things to focus on there. I think when you're looking at foreign policy among these two different candidates, there's certainly some nuances here that I think are, pretty important to explain here. We're looking at the war in Ukraine, for example. Kamala Harris likely going to continue pushing for more funding for the war in Ukraine. Of course, that's getting harder and harder to do, just kind of as, this war drags on. Donald Trump has promised that he would end the war within 24 hours of essentially being elected by getting Zelensky and Putin together. But of course, that would likely come with some considerable, concessions on Ukraine's part. There's definitely some differences, I think, here in foreign policy that, these two candidates are really looking at here.
Jill, thank you, Jill Deeses there. Yeah, we can't talk about all these things in one TV show, right?
No.
All these different issues. So read the big take. Okay, let's bring you back to those live pictures out of Shanghai here this morning. Chinese Premier Li Qiang is speaking at the China International Import Expo in the city. Let's listen in.
And renew friendship. Even the COVID-19 pandemic, one of the worst in history, did not stop us from continuing this practice. If the first CIIE was an invitation from China to the world, then each of the subsequent CIIEs is China and the world coming together to fulfill a mutual promise. Over the past 6 years, thanks to our joint efforts, the CIIE has established itself as an international public good that brings benefits to the whole world. During the past 6 expos, prospective deals worth more than $420 billion have been concluded. This year, we're expected to see a stronger turnout at the CIIE, with 152 countries, regions, and international organizations, and around 3,500 overseas companies joining the event, including 297 Fortune Global 500 companies and industry-leading enterprises, setting a new record. Because of the CIIE, coming to Shanghai in late autumn has become something many friends look forward to every year, which speaks volumes about our shared desire for open cooperation. On the other hand, the world is undergoing profound and accelerated transformation. The backlash against globalization is picking up steam. Unilateralism and protectionism are clearly on the rise. And global peace and development is confronted with growing factors of volatility and uncertainty. Against such a backdrop, it is all the more important for us to uphold, expand, and upgrade opening up, as it is the only truly effective way to promote lasting peace, stability, development, and prosperity. First, we must build stronger consensus for openness by keeping to our commitment. Opening up has come a long way at the global level. Yet many issues that should not have become problems keep emerging. In particular, various acts of dishonesty have triggered a broken windows effect, leading to increased rule-breaking practices. Only when all parties honor their commitment to opening up with real actions can we jointly foster an enabling environment for open cooperation and truly make opening up a universal consensus and conscious action. We should all observe rules underpinning the international economic and trade order and faithfully implement bilateral and multilateral trade agreements that have been signed so that all parties could be more proactive and determined in conducting open cooperation and support and complement each other's success on the journey toward common development. When it comes to promoting and expanding opening up, China has all along honored its commitments. We have fully delivered the pledges made when joining the WTO, reducing our overall tariff to 7.3%, which is even lower than the set target of 9.8%. We have followed through on all the opening up measures announced at the previous 6 CIIEs, including the recent step to remove all restrictions on foreign investment access in the manufacturing sector as promised. The third plenum of the 20th CPC Central Committee held last July rolled out a series of reform measures to expand high-level opening up. The Chinese government is operationalizing these decisions into specific tasks, work assignments, and division of responsibilities to ensure sound implementation of each and every item. Most notably, we will further expand institutional opening up, actively promote alignment with high-standard international economic and trade rules, carry out the strategy of upgrading pilot free trade zones, and explore high-standard free trade agreements and investment agreements with other countries. Delivering the promises made with actions will forever be a hallmark of China's opening up endeavor. Second, we must broaden the space for opening up by pursuing mutual benefit. Opening up is more efficient and sustainable when it's based on benefit sharing. The zero-sum and winner-takes-all mentalities will only hinder progress toward greater development. Therefore, we should continue to promote opening up in a spirit of win-win cooperation and with the readiness to help each other succeed. And we need to strengthen market and resource connectivity to open up new space for development. As the latest round of scientific and technological revolution...
All right, we will leave the Premier's speech there for now, and of course we'll dip in and out of that, of course, as we go through the rest of that conversation. It's worth noting that as Premier Li was speaking, the CIIE 300, about 50 minutes into the session right now, has just absolutely gone north. I mean, we're now at session highs. We're closing in on almost 2% right now on that index, on top of the rally that we had yesterday. So certainly expectations are it's maybe China more than U.S. equities. Let's put that question to Grace Tam, Chief Investment Advisor at BNP Paribas Wealth Management Hong Kong, here with us in our set. It's nice to see you, Grace. I'm wondering, for your clients that may have missed the initial leg of this Chinese rally, what's the advice right now? Do you add exposure? Do you wait? How does one approach that dilemma?
Yeah, I think with the view for the medium term, I think clients could still have some exposures to China, because I mean, in terms of valuations, it's still reasonable. And also, I think, especially for the previous package of monetary stimulus, I think it just shows the clear intentions that the governments there is still pro-growth. But in the near term, I won't be like really too optimistic about the NPC meetings I mean, everybody waiting for that magic numbers of fiscal stimulus. Because I mean, when you hear like even a lot of the top officials in China and even like President Xi, I think they repeatedly mentioned that they wanted to achieve the goal, the target growth of 5%. And for now, as you can see, recent economic data like PMIs, we're already seeing like some improvements in terms of economic data. So I don't think they need a bazooka fiscal stimulus to achieve 5%. So I think it will be more reasonable to expect like some fiscal stimulus. And what we heard so far is like they could have like maybe up to 10 trillion of debt swap, but that's for a few years. And also for the debt swap, the direct impact on the economy is actually not really very visible. But they may have like some like maybe 1 to 2 trillion of like special local bonds, and that really help the economy. So not really a big bazooka in terms of the fiscal stimulus. But I say in the medium term, we think still this is a good buying opportunities, because I mean, it looks like the bottom already formed. So I mean, in terms of the risk reward, it's still very attractive. But I think also like for the stimulus package that they announced previously, they talk a lot about like swap facilities, right, and that encourage a lot of liquidity in the market, and that should be supportive. Yeah.
It seems like this equity market, though, we were talking about how it's quite insulated from a lot of the U.S. election risk. When we're seeing this kind of movement in the dollar, movement in treasury yields, movement in U.S. equities, Chinese markets are actually doing quite well. I mean, to what extent do you think a lot of this election risk has been priced in already?
Mm-hmm. Yeah, I think especially over the past few weeks, it's very obvious that the markets like pricing in the Trump winning and also a Republican sweep. Because I mean, when you look at the U.S. yields, the U.S. dollar, and also the U.S. equity markets, like sector performance, is like bikes towards the Trump winning, and that actually move in tandem with the rising odds of Trump winnings and also Republican sweep. But I mean, for recent days, as we say, I mean, especially when we look at like for example, like the betting odds, it looks like Harris is catching up, things like that.
Yeah.
So that is look like the Trump trade is fading, but I think this week is I think it's going to be volatile because we don't have the result yet, and it could be very close result, and even like a contested result, and could drag on for some time.
Yeah.
And market could just move like according to a lot of news or noise.
Yeah.
Yeah, well, I'm wondering too how income has come back as a strategy, because yields have picked up and duration at that.
Yeah, I think especially in terms of yields, it already rebound. I think this is actually very good opportunities to accumulate or to buy quality bonds again. Because I mean,
they're super tight though, spreads.
Yes, spreads are super tight, but the all-in yield is still very attractive. And also, I think especially when you think about if it is a Trump win scenario. But for a Trump trades, a lot about Trump trades or Trump winnings are already priced in. And that could mean some reversal in terms of the Trump trade. But if it's Harris wins, it also means some unwinding of Trump trades. So, and that could mean that in both cases, it looks like we already, I mean, maybe we could still see like if a Trump wins, we could have some like knee-jerk reactions of Trump trades, and yields could spike a little while longer. But I think if it's already priced in, that means things are going, I mean, market is going to refocus on, economic fundamentals or corporate fundamentals again. So that could also mean some reversal of the Trump trades, meaning we could see the decline in yield from the recent peaks.
You have a call for our 12-month forecast for the 10-year yield at 4% then, which was non-consensus at the time when yields are melting up. You have more conviction around that call now, given what we've been seeing?
Yeah, exactly. So actually we already, planned it with like any spike in terms of 10-year yields about 4%. We're looking to opportunities to turn positive on U.S. Treasury again. But I think especially for this week, market could still be volatile, especially if Trump wins, we could still see the knee-jerk reactions. Maybe yields could spike up before it goes down again.
What if the Fed cuts?
Fed cuts, I think Fed cut is already priced in. So I think it's widely expected the Fed is going to cut like 25 basis points this week, and so don't think this is going to really move the market. Yeah.
Okay, Grace, great to have you. Thank you, Grace Tam there, Chief Investment Advisor at BNP Paribas Wealth Management here in Hong Kong. We got plenty more ahead. This is Bloomberg.
Right, welcome back. So about an hour into the session here. So we're just coming off highs a little bit right now on the CSI 300, up almost 2%. So we've given up a couple of points. We're still holding above 4,000 right now. We'll talk more about some of the other metrics right now, but I'm just looking at turnover, and we're going on 25 straight sessions now, and likely will be 25 of turnover above $1 trillion. We're barely an hour into the session, and turnover is now at about $1 trillion. So suffice to say, this is almost like the passage of time. We're going to get there whether you like tomorrow or not. Going into the lunch break over in Tokyo, I guess more on that in a moment. But certainly we did just wrap up the speech, of course.
Yeah, and that one line, China confident about achieving economic target this year, really echoing what we've heard from the president the past few months of maintaining that near 5% growth target this year. Certainly is giving a little bit of lift to these markets. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment here. And yeah, it seems like equity markets are liking a little bit of that story here this morning when it comes to the yen. And you know, what we've been hearing locally is from the Japan's Democratic Party of the People leader, Yoichiro Tamaki, telling reporters it's superficial, he says, to try to move FX with BOJ policy. It just adds to the discussion that maybe a lot of these policymakers are pretty hesitant to really hike anytime soon. Maybe that bodes well for the yen in some ways, or not negatively for the yen, helping the equity market in some ways too.
Yeah, but try telling that to FX traders who at least in terms of priority, maybe number one would be to trade on short-term changes in monetary policy. But I guess to the point being, you know, we need to focus on the fundamentals of the economy, I think is the other thing that we're trying to get to as well. And I think
they are an ally to a potential ally, the DPP, right?
Yes.
To the government. So if they're saying that, I think he was saying that
it could influence what how the BOJ thinks about it.
And he was actually saying very flat out, had a few days ago, that the BOJ shouldn't hike until March, basically at this point. So yeah.
And I think it's, let me also tie in the U.S. elections there, because we did have ANZ in the last hour, and you know, they think the yen is actually the most exposed currency to any potential unwind in the U.S. dollar moving forward. The other currency that we're tracking very closely, and I think that's Haslinda.
Just getting ready for the show.
Getting ready for insights with Haslinda Amin coming up. There we go in the next hour. We looked at dollar China implied vol overnight has gone through the roof. Looking at events, of course, this time tomorrow. Equity markets, though, don't seem too bothered by it. Most sectors are up, although volumes, with the exception of a few markets in the Asia-Pacific, are actually seeing subdued volumes as well. The other conversation we were having earlier on, before we talk about this too, is the amount of outflows coming out of the Indian market coming back into the Chinese market, right?
Yes.
So the reason I bring that up is, you know, I saw Haslinda. I was reminded that India is actually, of course, which opens up in the next hour, is actually on the verge of entering a correction. We're about 1.5% away from, and it's been a while since this market has actually seen downside momentum pick up, at least to this magnitude.
Yep, you're starting to see more of that, right? That trade, that rotation out of India into China, as getting, you know, those calls getting a little bit louder of late. Let's get back to Shanghai and go to our Chief North Asia correspondent, Stephen Ingles, who is live for us at the CIIE in Shanghai. And Steve, the Premier just wrapped up his speech. What were some of the key takeaways?
Yeah, as we are seeing on the podium as well, Anwar Ibrahim of Malaysia is speaking to the CIIE right now after a fairly abbreviated or short speech from Li Qiang, the Chinese premier. And nothing too earth-shattering other than he's echoing what other Chinese officials have said, and that is they are fully confident that they can reach the full-year growth target of around 5%. This, of course, after the second quarter and third growth trended below that 5% mark. But then again, in late September, we had that raft of stimulus, which could obviously spill over into this current fourth quarter. And we'll have to see, as the National People's Congress Standing Committee is meeting in Beijing right now, whether there's going to be a big bazooka fiscal number coming out of that meeting, perhaps announced by Friday, in addition to that debt swap program that was sort of leaked by the Xinhua news agency that the NPC Standing Committee was discussing in meetings in Beijing yesterday. But some of the key headlines, in addition to basically being confident they'll hit that growth target, he said that the government has the ability to promote sound economic development. That is a recurring theme, obviously. He said while multilateralism or unilateralism, protectionism is on the rise, Li Qiang says China resolutely safeguards the multilateral trading regime. Again, that's kind of a veiled comment about what he is seeing and Beijing is seeing out of the United States, with the election campaign obviously at a fever pitch just within 24 hours of polls opening in the United States. No comment, obviously, about the U.S. election. China, he says, will continue to open up its telecoms and internet sector in particular, and that is something that here at the CIIE will be a hot topic as EU chamber, other chambers, American Chamber of Commerce, they've been calling for more market access for services and goods, foreign services and goods into this market.
And, yeah, Steve, that's such a, what's a good way to put it, a paradoxical juxtaposition there with, people talking about how they need to de-risk out of China, foreign companies I'm talking about specifically, yet all of them are there calling for more market access. It's a market that they cannot ignore despite the geopolitics out there. And the reason I bring that up, Steve, I was wondering if you could talk a little bit more about the Xinhua report, where the premier yesterday talked with foreign business leaders in China, that China is in fact open for business despite all the noise across geopolitics.
Well, clearly the Chinese leadership is trying to court foreign investment after in the second quarter there were significant outflows. We saw the stock market dip. There's been obviously a boost of confidence coming around the stimulus, but before that peters out, they want to give a perception of openness, and at a time as well potentially of a new president. Well, there will be a new president come January, but what kind of president will it be? Will it be a continuum of Kamala Harris from the Biden administration, or will it be the uncertainty of a Donald Trump presidency with the threat of across the board 60% tariffs across the board? So you've seen sort of a charm offensive coming from Beijing to some of America's allies. Potentially, of course, these export restrictions from the Biden administration could very much change under a Trump administration. This is the top headline out of the China Daily today. China holds wide appeal for investors. Obvious statement. Yes, China, with the massive market and the massive opportunities, is appealing to foreign investors. It's just the risk factor that has been exponentially increased over the course of this year as the Chinese economy has struggled. So what did Li Qiang do yesterday, according to Xinhua? He met with foreign leaders like the ones we are seeing on the screen right now, including, I'm sure, Anwar Ibrahim was there. I know the Mongolian Prime Minister is here, among others, but also the big corporate leaders who have come here to try and find where the opportunities are. In particular, there's a lot of retail and consumption goods makers from abroad who have come here, whether it's European luxury goods makers like the chairman of LVMH is here. So they want to see whether some of the stimulus that's going to come through is indeed going to filter into the confidence of the consumer.
Steve, fantastic reporting there in Shanghai for us, our chief North Asia correspondent. And when you look at these markets, and certainly Steve pointing out a very good point there, right? So it's extremely difficult right now to disentangle what the structural issues are with the economy and what the cyclical issues are. And as it pertains to businesses, investors, how you actually apply that onto a market strategy. What is structural, what is cyclical, amid a cyclical pickup that we may have started to see in the early innings of the PMI reports, which have come out in recent days. Markets have been picking up, particularly when you look at small caps, for example, although we are losing some steam right now in the large cap space. We're still up the 2 straight days. Let's bring in Abhishek Vishnoy, our senior equities reporter. Abhishek, with elections coming up in 24 hours, U.S. elections with potentially a big number, or maybe not, out of China, how much more risk is appropriate at this point in time? What's the sense from, the people that your team is talking to today?
I think our reporting is reflecting that markets as a whole are very prepared in terms of what comes out of U.S. elections. I mean, if Trump comes, there are risks, and stimulus will mash those, neutralize those to a great extent. If Harris comes on board, it's a continuation of the regime that we have seen. So all in all, valuations and stimulus at whatever level comes back in focus for China. So, investors are a bit more prepared. I was talking to a lot of them, little giants, the smaller stocks, which are tied to Xi Jinping's, themes of self-sufficiency, self-reliance, are emerging to be better bets. They may look volatile, but they're also tied to a lot more towards domestic optimism. And other than that, I mean, on this PMI data, this might be a green shoot, but look, you got to give credence where there is. In the US, the PMI data acts as a leading indicator of, future earnings outlook. The future earnings outlook lags the PMI data by 2-3 months. So in China's case also, that's true. So manufacturing PMI has improved, services PMI has improved, which means stimulus is working. and which means more stimulus will lead to more such macro data points. And these macro data points is what foreign investors have been waiting for, right? So, they are emerging now. So that's why markets are getting a bit more excited. Bulls are hungry, and they are getting these data points, every now and then, in some form of, better macro reading, more news flow around the debt swap program, more news flow around the stimulus. And like I said, the setup is pretty much prepared for what comes out in terms of U.S. election result.
Right, and I'm just wondering, the fact that we had a little bit more detail on the debt swap, not fully, but I'm just wondering, do we actually need something by the end of this week from the MPC to keep this sort of momentum going here right now, Abhishek?
I think, 2 trillion sort of debt swap, that is sort of baked in. That's what some of the investors were telling us. Anything more, especially on direct consumption side, or anything more to address, property market slowdown would be great. We have already seen some green shoots even in property data. Pricing decline has stopped. Sales are picking up in major cities. So anything more directly to address these things, would be great. There is a thought emerging, like if China wanted to do more directly to boost consumption, it would have done. If it was looking for a big infrastructure sort of bench, it would have done it by now. But on property side, given this is the structural issue, this is the root of the problem. This is the problem why deflationary pressures are magnifying in the economy. There might be more that can be done for property sector. And look, if it is not done in the coming NPC meet, you have China has time on its side. Valuations are really low, so it may look like a trade at that point, but then valuations are still relatively lower. So in that context, it gets the time. I think investors would be ready to give China more chances to come out with meaningful stimulus that leads to meaningful improvement in macro data points.
Yeah, let's hope they're as patient as you are, though. Abhishek, thank you. Abhishek Vishnoi, their senior equities reporter, but he has a point, of course. Floor is in, and maybe there's slightly more give right now as far as that, the run of patience from investors, who have been burned before, but maybe not yet this time, or not this time around, not yet. Okay, there we go. Where the rally is still fairly consistent is in the bond space, particularly on the long end. Not a lot of movement, but yields have been pointing down consistently of late, and we're now down a 6th straight day on your 10-year CGB yield. Okay, we'll leave you there for now, and plenty more ahead. And we almost forgot, there's a rate decision coming up today. More on that in a moment. This is Bloomberg.
Today, we expect the RBA to shift towards a more neutral stance. So they are shifting. But at the same time, we don't think, at the end of the day, when we read the minutes, we see whether a hike was discussed or not, whether a cut was discussed or not. We definitely don't expect a hike to be discussed at this meeting, just given the data has been in line with the RBA forecast to quite a large extent.
Mahjabeen, Zaman there from ANZ telling us what she expects from the RBA's policy decisions. They still have a pretty ambitious sort of forecast when it comes to the Aussie dollar, 69 cents by year end. Certainly one to watch as we count down to this decision from the central bank there, poised to keep interest rates at a 13-year high, marking a year of unchanged policy. And that's as it grapples with a slow pace of disinflation and mounting global risks that have been capped by a tight U.S. election. Let's bring in James McIntyre. He's joining us from Bloomberg Economics on what to expect here today. You're saying get ready for a bit of a tilt today. How so?
Yeah, that's right. So, if we look at, say, market expectations, the consensus, it's all for very much nothing happening today and come back in February, in early next year, and we'll see some action from the RBA then. I've got a slightly different view, or have put another idea onto the table, which is looking at what goes into the RBA's decision. So every quarter, they do an update of their forecasts. that they'll be doing that at this meeting after the August forecast update that they delivered 3 months ago. And what we've got compared to then is a higher interest rate assumption. And so what that's going to do to their forecast is it's going to lower inflation and growth at the back end in particular in the second half of 26, which the RBA was sort of saying we're almost there. It might be enough to put them there. So it could be a little bit of a bit of a surprise while no one's really looking at the RBA today thinking that it's going to be not much happening.
Yeah, I thought we were talking about the BOJ for a minute there. Sneaking in an idea while no one is looking. Well, talk to us about then what are the signs, James, you think we should be watching out for? The reason I ask you that is we have a meeting today. The next one I think is in 4 weeks, give or take. And the meeting after that is more than 8 weeks away, I think a couple of days after Valentine's Day. And, you know, how early typically does the RBA signal any potential future move is what I'm trying to get to here?
Yeah, so we've got a situation here. If there's nothing today, does the RBA come with a pre-Christmas surprise, or does it leave everyone hanging till after Valentine's Day? You know, it's a long wait between now and now in February. So what's the RBA actually looking for? Look, we did have headline inflation come down to within the RBA's target band. That's a welcome development, but it was very heavily driven by government subsidies. Underlying inflation, it's still creeping down. It's on the way. Some of the more timely indicators and the monthly indicators and what we see from business surveys suggest that the inflation battle is won. It's just a case of getting there. So what could really tip us over the line? I think between now and Christmas, after this meeting, we've got another reading on household spending and the 3Q GDP data. And what those could show and those could tell us is that another reading on the health of consumers. And as we see, that consumer spending story has really been quite weak, and it's been one that's been driven by population growth only, with per capita spending declining. We've got migration coming away and some signs of a few wobbles in the Sydney housing market. So those are a few things to watch over the next couple of weeks to see whether we get RBA Governor Bullock donning that Santa Claus hat and giving us relief then, or extending the RBA's hold to be one of its longest periods of hold on history and waiting until the new year.
Okay, well, patience is a virtue, as they say. James, thank you so much. James McIntyre from Bloomberg Economics in Sydney for us. You can turn to your Bloomberg, by the way, for our clients, or TLIV Go, as we approach that meeting coming up and that decision to get commentary analysis, of course, of this rate decision that should be up in about very soon. Plenty more ahead. This is Bloomberg. $33,000 striking Boeing workers are voting on whether to accept the plane maker's latest offer, or plan B is extend their stoppage. Now, the latest proposal would boost wages by 38% over 4 years and give workers a $12,000 signing bonus if it's ratified. Let's bring in our transport reporter, Daniel Lee, to just get us up to speed here. And I mean, we've had these two options on the table, Danny, for quite some time now. Are we leaning currently toward near any of the two on the table at the moment?
The market expects this vote to be passed, and we're just 10 minutes or so away from voting to close. And then within a couple of hours, we'll know the final result, whether to accept this deal with this workers to end their strike after almost 8 weeks or so, or to stay on strike. And that would be a blow to Boeing here. But given how narrowly this vote failed the third time round, this fourth time round, and this increased offer, looks more likely that this vote will be passed here.
What remains still the key sticking points? What sets these two groups apart right now still?
I mean, the key sticking point really does resolve around pensions and the lack of resolution around that, which is why we saw this increased offer on pay and this increased bonus. So movement has been made by Boeing to try and up the offer without conceding on something as critical as pensions, which they restructured, which is why this resolution has still yet to be found. But given they have made headway, if it does pass, ultimately, this will be good for Boeing so they can focus, and Kelly Ott, both new CEO, can just focus on the key strategic decisions of trying to right-size Boeing and focus on what kind of business units they will focus on in the future, because this strike just damages the finances even more. And the challenge now then is to ramp up, which will take a considerable amount of time.
Danny, thank you. Danny Lee there, transfer reporter with the latest when it comes to Boeing. We'll bring you any updates once we do get any clarity on that vote. Now, some other major geopolitical stories that we're following for you today. European and U.S. intelligence officials believe Russia is behind a plan to place incendiary devices on cargo planes bound for North America. 4 people have been arrested, and German security services think a parcel that caught fire at an airport in July was probably planted by Russia. The officials tell Bloomberg they're taking the alleged plot seriously and expect Moscow to attempt similar acts in the future. Ukraine says it has engaged with North Korean troops in Russia's Kursk region for the first time. Reports suggest Pyongyang has dispatched about 10,000 troops to Russia, a deployment seen by Western leaders as an escalation of the war. Moscow has been pushing hard to dislodge Ukrainian forces from Kursk after Kyiv's surprise incursion in August. Israeli officials say they're seeing an unprecedented number of Israelis spying for Iran. Since July, their counterintelligence service has indicted 23 suspected spies for helping Tehran locate targets for potential attacks. They were allegedly recruited through social media and offered thousands of dollars in payment. The Israeli government says it is taking the threat seriously.
Right, some big moves we're seeing in the onshore market. These are specifically bad debt managers and also perhaps some related developer stocks on the back of this rescue plan. I'm just looking through the details of this one right now. So shares of bad debt managers and developers are on the up. The NPC reviewed this proposal, of course, at easing some of the burden at locum. A short version of saying that, sorry, I just was reading off the story here, is that China's top lawmakers are reviewing this local government debt swap program. I think that's a fairly straightforward way of saying that. Sorry, I went through the script. Defense stocks in focus. There's this new stealth fighter debuted today. It's a J-35A stealth fighter jet at the Zhuhai Air Show that's this month. And these are some of the related stocks after the Chinese military announced that it will be unveiling that model specifically, that fighter jet, coming this month. Now, the J-35A together with the J-20 would then make China the second country in the world with 2 specific stealth fighters after the U.S. Ooh, interesting pivot here ahead of the elections.
Yeah.
According to CCTV.
I didn't understand anything you just said.
No,
very technical aviation stuff.
Yeah.
Anyways, that's it for us here at the China Show. Of course, we're going to take a look at what Linda has an insight coming up. Stay with us.